The buyers put up a huge fight at this $7 level, but finally lost the battle in mid-January, where price started closing below this battleground again at $7. Now, I've been talking about this $6 target for months, and we can see in January we had a close at $5.74, and to begin the month in February we are now reaching new lows to begin the year. However, if you watch previous videos, I did say this is where you want to load up the dump truck. However, don't be so quick to back up that truck, as you need confirmation, if you are a conservative investor, that prices are going to stabilize in this huge support resistance band and then eventually turn around. You want to use the technicals and see if they are in alignment with the fundamentals, and that's where this article comes into play. So Chinese automaker NIO is not the biggest nor even the best EV company or stock on the market. It ranks 9th in market share in China. Third quarter sales disappointed, and it's relying upon government cash infusion to keep driving forward. Yet it's not a complete disaster either. NIO sales are growing, albeit at a slower than hoped for pace. It also has an innovative battery swap business that could be valuable even as a spun-off standalone operations, and NIO is likely not going to be allowed to go under, so it has a base of support. So here's the good news. It just reported an 18% year-over-year increase in January deliveries, with 10,000 EVs going out the door. NIO delivered over 160,000 vehicles in 2023 and cumulatively hit almost 460,000 deliveries total. It also opened again its battery swap business to the entire industry and signed strategic agreements with JAC Group, who agreed to help build out the swapping network. Alright, here's the bad. NIO remains unprofitable at a time when competition from other EV makers is fierce. You have both Tesla and BYD are battling for dominant position in China. Also, as mentioned earlier, the EV stock relies on government subsidiaries and incentives for a lifeline, which may change or diminish over time. However, it did get a cash infusion from the United Arab Emirates Sovereign Investment Fund, CYVN Holdings, for $2.2 billion. Last summer, it also received $1 billion from the fund. The really ugly stuff. So without government support, China's going through a bad period right now. Stock is down, but they're injecting cash to eventually pop up the economy. NIO could face a liquidity crisis or debt default. It might have to raise more capital and generate enough cash flow to meet its obligations, yet it carries a heavy debt load, reported delivering losses of $2 billion in 2022 and a negative free cash flow of $1.6 billion. Wall Street expects losses to balloon to as much as $2.6 billion in 2023 when NIO reports full-year results. Alright, so that was the good, the bad, the ugly. Going back to the charts. Again, no sign of a reversal. A couple of weeks ago, price tried to close above this key $7 level, but the sellers remain in control. I'm looking for high volume buying bars, and I don't see any. This extended range green candle means that price can continue to move down, eventually breaching this band. Going to the daily chart, all your moving averages are now starting to point down, so that is not good news. And all this sideways price action means that price isn't going to find support anytime soon. Maybe $2.50, which is that would mean 100% decline from current prices. Now, I don't envision NIO getting that low, but just like we had the W pattern formation back in 2020, I would love to see that happen again. And that would be your sign that price is in the process of reversing. Thanks for watching. Subscribe. Please like the video.